Well, there was a little bit of strength at the end of last week, and the markets are starting to show signs of a bottom. So, is the stock market correction over? I'm going to give you my answer on that, plus show you 3 stocks that I think are worth considering. That's all coming up in this week's Market Minutes. So in recent weeks, I've talked about how the market is threatening to break the downward trend line. It hasn't done it yet, and I'll expand upon that later in this video. But one thing that is starting to happen is the intensity of the downward moves is lessening, and you're starting to see the buyers show a little bit of interest. And I'll elaborate on that in a moment. So if that's the case, then it might be interesting to start looking at some of the sectors that are rebounding and some of the individual stocks that are rebounding. I think to buy the market entirely with great enthusiasm is a little too aggressive because we don't really have yet strong signals that the market is reversing. But I do think it's okay to dip a toe in the water here and there. And so here are 3 stocks that I found using the Stockscores market scan, seeking out names that have had decent gains and are starting to see their sentiment stock score get a little better. Now, before I show you the 3 stocks, I'm going to just remind everyone that we have some events coming up, free webinars that come up starting Saturday, October 29th. And you can register for those at stockscores.com. Just go to the homepage and scroll down to upcoming events. I've got just some lessons on how I analyze stocks, how I assess risk and reward, and all those sorts of skills that are important, whether you want to be a long-term trader or a short-term day trader. And I've got some individual webinars that are specific to those topics as well. All right, so let's get into some of these names that I have found using the Stockscores market scan. SPNT is the first. And a couple quick lessons to help understand why this is worth considering. So first, you always want to assess who's in control of the market. Are the buyers in control or are the sellers in control? If the sellers are in control, you've got falling tops. And so you can see that we had falling tops into the middle of August. In the middle of August, we started to build rising bottoms. And so that is a sign that the buyers are taking control. And then this week, the stock was able to break out through resistance from optimism, having broken the downward trend line. So this is a bottom fishing or a bargain hunting type strategy. You can see volume picking up a little bit at the end of last week. So there's some good signs there. Now, not every trade is going to work. I always go into every trade with the expectation that I've got a 30-40% chance of being wrong. And what that means then is I have to plan for the point that I am wrong. So that's your next lesson, is we always want to plan to lose if the stock falls below support. Support is where the stock stopped going down and started going up before the entry signal. So in this case, it's just under 450. So let's call it $4.45. If the stock were to pull back, close below $4.45, then I would consider this trade idea wrong and to take the loss. All right, the next one, RCL. So this is one of the areas of strength that I've seen in the last couple of weeks. The cruise lines, the airlines, they're starting to get better. By no means are they great, but the chart of Royal Caribbean is looking better because, again, we've switched from falling tops to starting to build rising bottoms, and then this week started to show some strength. Now, I always like to look at charts on multiple time frames. So here, when we go to the 3-year chart of Royal Caribbean, you can see that we've built this rising bottom and we're breaking a pullback after an upward move. So I think that this is maybe a longer term play, but I think it's got decent chance to get back up into this old trading range, which was from 2021 in between that $70 to $90 mark. We're at 50 now, so it's decent upside for the type of stock that it is. All right, the last one I'm going to show is a Canadian listing, T.FM, First Quantum Minerals. And what I like here is, again, switching from falling tops, which is a theme that you should be looking for right now, and moving to rising bottoms. And then on Friday, we had this abnormal price move, breaking the stock through the top of this pattern. It's called a pennant pattern. So you can see the rising bottoms, falling tops. What that means is that volatility is compressing. The waves up and down are getting less and less. And then the buyers came in on Friday and actually broke it out of that pattern. So that's another one. Now, where is support on this stock? right about 22. You can see that's where the stock stopped going down and started going up. If you want to be a little more conservative, you could go with $20 as sort of your stop loss point. When I'm trading off of the daily chart, I like to see the stock close below support, not just hit it. These are some of the lessons that I will teach you in those webinars starting Saturday, October 29th. I'll go through a lot of these concepts and give you some of the things that I've learned from doing this for over 30 years. All right, well, let's get into our normal market analysis now, and we'll start off with the US markets, SPY, and really try to answer the question, is the correction, is the crash over? Well, as I've explained in many videos recently, we're looking for the downward trend line to be broken from a rising bottom. We don't quite have that on the S&P yet, but we are building the rising bottom. And we could break that downward trend line as early as Monday, because we're very close to it now. So that is what I'm watching for right now in the stock market. Now let's take a look at the longer term chart, the 3-year weekly chart. And what you can see here, if I draw the trend line, it looks something like that. We are far below the trend line. All right, that's called oversold. What that means is that the buyers were weak and the sellers were maybe a little emotional, maybe a little bit of panic in recent weeks, and that caused prices to go down too quickly. And anytime you fall far below the downward trend line like we did there, we often typically will come back up to the trend line. So that may be what's happening here. We may be simply going to go through 3 or 4 weeks of strength coming back up to the trend line. Until we actually break that downward trend line on the weekly chart, preferably from a rising bottom, I wouldn't really call the correction over, but I do think there are signs that we might be moving toward that, and that's why I think it's a good time to start nibbling on some stocks carefully, not too aggressively. All right, let's take a look at the small cap sector in the US. This is IWM, and again, I like to draw the trend line. Just start at the high, let your line fall until it hits the other price peaks along the way. And you can see that on Tuesday, we actually broke above it, but the buyers could not hold the gains. And then Friday, we started to move up again, and that's building that little rising bottom. That's why I think we could be on the edge of a little bit of a short-term bounce back. Remember, seasonality is on our side. Markets tend to do well from October till May, and it may be starting up here again. I never buy because of seasonality, but I do watch for signs that the seasonality is happening, and we're starting to see that on these market indexes. Let's jump to the Canadian market. T.XIU is the symbol there. And again, there's your downward trend line. We're flirting with it. We're making this little head and shoulders bottoming pattern. Now we need to break through the neckline, which is the downward trend line. If we can do that from the rising bottom, great, but we haven't done it yet, so that's just something to keep an eye on. I would still be fairly cautious with Canadian stocks. Now, jumping gears a little bit, let's jump into currencies. The US dollar continues to be in that long-term upward trend, but it is starting to show a little bit of a pullback here. Now that's reasonable and kind of expected because we ran away from the trend line, so we were overbought, and now we're working our way back to the trend line. Same thing happened here. We were overbought. We know that because of the distance away from the trend line. Same as here. Notice every time you're overbought, when you run away from the trend, you usually come back to it. Run away, come back to it. The question is, when do you actually break the upward trend line? You can see every time so far, we've held the upward trend line. Will this be the time that the US dollar actually breaks down through it? That remains to be seen. A lot of that will depend upon interest rates, which I'll talk about in just a moment. Now, the US dollar has a big effect on commodities. So if we take a look at gold, GLD, which is priced in US dollars, you can see that gold had a little bit of a bounce on Friday, making a double bottom. Still hasn't broken the downward trend line, so this is a really aggressive, almost overly hopeful signal that the downward trend in gold is over. I wouldn't call it that way yet, but we've taken one small step in the right direction. And generally speaking, gold has been going sideways for the last month or so. That double bottom, a good sign. Let's see if we can break the downward trend line. The other big commodity, of course, priced in US dollars is US oil, or USO is the ETF that I like to look at for oil. And on the daily chart, you don't really see much. You see, falling tops, and you're seeing the first rising bottom building. But it's a little bit more positive when you look at the 3-year weekly chart, because there we can see this long-term upward trend line has been touched a number of times. And we bounced off of it 3 weeks ago. That's a decent sign if we build a rising bottom that we can start to move up again. And we've seen some strength in energy stocks. So the actual oil and gas companies have been doing better in the last few weeks. And that is maybe based on the idea that oil prices seem to be hanging in there and these companies are getting great earnings. We're into earnings season, so the market probably buying those ahead of earnings announcements. All right, the last thing I want to look at, well, actually three more things. GBTC is Bitcoin. It's an ugly chart. I would stay clear of crypto as long as the tops are falling like they are here. How about interest rates? TBT, this is an interesting chart. What does that say? Well, if you've been listening, you'll know that we are above the trend line, way above it, which means we're overbought, which means this should come back. This is not interest rate specifically. It's a proxy for interest rates. It's the inverse ETF of the 20-year Treasury bonds. But basically, if this is going up like that, that means interest rates are rising rapidly, and they rose too fast, I would say, in the last few weeks, and we're likely to see a pullback in the near term in interest rates. And then the final thing we'll take a look at is the fear chart, UVXY. This is based on the implied volatility of the futures market for the S&P 500, and it's fallen back the last week and a half and starting to break this upward trend line. We may see fear quiet down. If the stock market can start to move up, that could be all of these pieces coming together. All right, so let's take a look then at my ratings. US stocks, I remain bearish long-term, but neutral short-term as there is signs of a bottom, are signs of a bottom. Same for Canadian stocks. Gold, still long-term bearish, but neutral short-term as it's making that double bottom on the daily chart. Oil neutral on both time frames. US dollar bullish on both time frames. And as I said, Bitcoin and crypto in general still bearish. Interest rates remain bullish on both time frames, but risky for a pullback. I think it's quite likely that that will happen. All right, now let's take a look at the day trade of the week. Every day on our active live service at Stockscores, I guide people through the trading day from a day trader standpoint, and we have some special tools that we run that find hot stocks early. And one of the things that we look for is abnormal activity. With earnings season starting, we're seeing more of that action in some of the more expensive stocks as these companies announce earnings. And HBAN, Huntington Bank shares, was abnormal on Friday. It pulled back, broke the pullback with our action candle indicator. And I will explain more about the action candles and all those sorts of day trading concepts in the day trading webinar that I have coming up. And again, you can register for those at stockscores.com on the homepage. And anyway, it went up fairly well. A little more capital intensive on this trade because it is a larger cap stock. For every $100 of risk, you would buy 1,240 shares. That is about $17,500 in capital. But of course, you can leverage these things 3-to-1 when you're day trading if you want. And so for $5,850 of capital required, it made about a $400 gain, which was a 6.8% return on this trade for the day. Pretty decent. Again, I'll remind you that those upcoming events on Stockscores starting Saturday, October 29th, and then a few more the week that follow. Hope that you've enjoyed this week's video. If so, please click the like button, leave a comment about where you think the market is going. Do you think we're going to break the downward trend line next week, or are we going to resume the downward trend? I'm always interested to see the consensus on that. So leave a comment, and most importantly, trade well.